The context for this year's budget was set on the backdrop of Ireland signing up to the OECD G20 Inclusive Framework Agreement last week, whereby essentially Ireland is going to increase its corporation tax rate from 12.5% to 15%. The 15% rate is only going to apply to multinational corporations with a global annual turnover of 750 million euros. Importantly for Irish domestic businesses, the government reaffirmed its commitment to the 12.5% rate in today's budget, and essentially any businesses or companies with an annual turnover of less than 750 million euros will still be eligible for the 12.5% rate of corporate tax. Some of the business measures that were announced relate to the EWS scheme, which was introduced in last year's budget for the COVID pandemic. It would remain in place in a graduated form up until April 2022. In addition, there was some welcome measures for the EIS scheme, in addition to the extension of that regime for a further 3 years. Finally, they reaffirmed the continuation of the 9% VAT rate for the tourism and hospitality sector up until the end of August 2022. Some of the personal tax measures introduced in today's budget would include an increase in the standard rate band of €1,500 to include a modest increase in some personal tax credits. In addition, there was an increase to the second rate USC band. And finally, for employees who work from home, there was a welcomed introduction of a 30% tax deduction for voucher expenses incurred on light, heat and broadband. Two other measures of note announced in today's budget would include a refundable corporation tax credit for the digital gaming sector. Essentially, they've announced a credit of 32% on expenditure incurred in the design, production and testing of games. In addition to that, the government announced the extension of the corporation tax relief for startup companies up until the end of 2026. It is also worth noting that the government announced the introduction of a zoned land tax to increase the supply of residential accommodation. The zoned land tax will operate at a rate of 3% on the market value of the land, and this will be introduced on a phased basis. It will also replace the existing vacant site levy.